watching the pre-budget special edition of Editor's Take on Money Control. I'm Sakshi Batra, and with me is Kshitij Anand. He's the markets editor at Moneycontrol, and we are going to be discussing about what are the expectations that D Street has from the upcoming budget. Thanks a lot, then, Kshitij, for joining in. Well, the D Street has been riding high on hopes. In fact, we've seen some record high levels being clocked in on both the benchmark indices, Sensex and the Nifty, right ahead or just a week ahead of the budget as well.
Yes.
So, are you expecting some big bang announcements as far as markets are concerned in the upcoming budget?
Hello, Sakshi, and hello, viewers. Well, definitely, ahead of the budget, we are seeing some big or mammoth rally in D Street. In fact, Sensex is clocked a fresh record high above 42,000, and Nifty 50
That's right.
also reclaimed that magic number of 12,400, which we, sort of talked about. So definitely, both benchmark indices have been managed to hit their fresh record highs ahead of the event. Now, can we say that, the entire rally is because it's a pre-budget rally, or it can be attributed to the budget itself?
Yeah.
Well, I'll probably refrain from saying that no at this point in time. Now, why I say that is because although if you look at the global factors as well, over the past month or 2 months or so, there's some bit of truce which has come up with respect to the trade wars between the US and China. The geopolitical concerns have also eased. We saw, the geopolitical concerns with respect to US as well as Iran, which sort of led to boiling in crude oil prices, which were above $70 a barrel. Apart from that, rupee depreciated quite a lot. In fact, it reached the 72 rupees per dollar mark, and that has also come down. If you look at the crude oil prices at this point in time, they're trading around about $62 a barrel, approximately $10 low. Around from 71 or $72 a barrel that we've seen around about that time.
Right.
So global factors have contributed a lot in supporting this rally at this point in time. And yes, I will not say that there are no expectations which are getting built into the budget. There are a lot of expectations getting built into. Why at this point in time is because the growth that has come up, or the if you look at the GDP estimates or advanced estimates that has come up, is around about 5%, slowest place in 11 years, is something which calls for action, and that is definitely Street is building into some sort of policy reforms which will be pro-growth, you could say agriculture, and pro-reform. So this is something which Street is getting built into at this point in time. So expectations are running high, but at the same time, I'll say it is also a double-edged sword. Now, why we say that is because the way the market has rallied in the past 2 months, and it has built a lot of gains. Now, if in case expectations are not being met accordingly, there could be a knee-jerk reaction definitely in the first week of February for sure.
All right. So I want to ask you also about the big thing that all of us are watching out for, and that is the LTCG, or the long-term capital gains tax as well. Now, this was introduced in the 2018 budget, and post that we actually saw FIIs running away from the Indian equities. There was a huge sell-off in the Indian markets, and investors had been really put off. The sentiments was really hit bad after this was really introduced after many years. So what is the expectation on this front? Markets definitely would be hoping for some bit of relief, but can we expect that?
Well, Sakshi, I'll say that the golden words were repeated back in 2019 and now in 2020 as well. Now, whether that comes through, we just have to see. But there are two expectations that is running at this point in time. One is definitely a complete removal of LTCG, and STTT, as well as dividend distribution tax. Now, the other part is that there are some voices on the street which also expect that there's a high possibility there could be tinkering with respect to the holding period.
Okay.
Now, if in case you hold a security and for more than 2 years, or sell after holding for more than 2 or 3 years, then there will be no LTCG tax which will be on the investment. Now, remember, at this point in time, given the fact that government finances are quite strained, and all the taxes, whether it's direct or indirect, are as a way of earning revenue for the government. Now, how much fiscal space the government has at this point in time, whether they will be able to cut down on those taxes or not, I think Nirmala Sitharaman, the finance minister, is the best person to do that on the 1st of Feb. But at this point in time, expectations are running high with respect to LTCG, dividend distribution tax, as well as STT, for the removal of all the three taxes. And if in case that comes about, it will be a good news for investors as well as for foreign institutional investors, which have poured in on about 1 lakh crores in the calendar year 2019.
Absolutely. Now, Kshitij, the one number that the D Street really watches out for in the budget is the fiscal deficit number.
Yes.
It has been kept at 3.3% of the GDP, but looking at the kind of expenses that we've seen by the government's end on the government's end in the past few months,
Right.
There's a high likelihood, and most of the experts who we are speaking to on Moneycontrol do believe that there could be some slippage on this front. I want to understand from you, if there is a slippage,
Yes.
how much of a slippage will markets be okay with?
Right.
And will it be a detrimental impact that we'll see if there's a huge slippage on?
Well, at this point in time, if you've spoken to a couple of experts around it, and one thing is clear, that government is not able to, or it will not be able to meet the fiscal deficit target of 3.3%. Now, that is for sure.
Okay.
Now, how much slippage is possible is around about 30 to 50 basis points.
Okay.
That is something which Street is comfortable with at this point in time. So, if in case it comes at 3.7% or even 3.8%, is something which should not really lead to a knee-jerk reaction on the Street at this point in time.
So much is already being factored in.
It's already been factored in,
Okay.
or at least the Street is comfortable with that number. So,
All right.
right. But if in case if it does crosses around about 4% mark, then yes, there will be some bit of knee-jerk reaction on the Street, and that is something which Street might not be building in at this point in time, because that is too much of negative news, which the Street has to deal with at this point in time. Now, if you look at this budget, the bad news is not something which is taken as a bad news. I think because the growth rate has come down so strong, around about 5%, slowest pace in 11 years. So because of that factor, the investors want government to really invest in the economy, so
Okay.
for that, if in case some bit of fiscal slippage is possible, I think that is something which is a giveaway. That is something which is they're comfortable with at this point in time. So to answer your question, yes, 3.7, 3.8% is something which the Street is factoring in.
Okay.
Any number above 4% could lead to a knee-jerk reaction on the Street.
All right, and last two questions there, which will be of most interest to all the investors and viewers who watch us on Moneycontrol, and that is about which are the sectors that will be extremely important, which will hog the limelight in the upcoming budget, so they can actually understand which are the sectors they really need to focus on right ahead.
Well, absolutely. Whenever the budget is, I think economy-linked sectors are something which will really hog the limelight, especially infrastructure. You could say real estate. Then you have Make in India sectors which are pertaining to Make in India, manufacturing. If you look at, there are also expectations that in the auto space, scrappage policy could be introduced. So let's say, so auto sector would be in focus. Apart from that, there could be some bit of tinkering with respect to the agriculture, the chemicals, as well as the cement sector. So all these sectors will really hog the limelight ahead of the budget and post the event, as well as and when the policies will be introduced, because most of it would be centered around building the economy.
Yeah.
And definitely, if that is the case, then all the economy linked sectors will get a boost.
All right, so the economy-related sectors are something that you will need to watch out for right ahead of the budget, even during the budget day and post that as well, since a lot of allocation will be allocated to these particular sectors in the budget, and that is the expectation over there. Apart from this, let's also focus on the particular stocks that you need to keep on your radar right ahead of the union budget. So Kshitij, if you would have spoken to a lot of experts, I'm sure,
Yes.
what are they picking up? Which are the sectors they are focused on, and which are these magic names that you want to share with all our investors and viewers watching us, so they can actually put their money there?
Absolutely. Well, we talk about sectors. Now it's time to talk about stocks, which will be in focus ahead of the budget and post the event as well. So we spoke to a couple of experts, and they've given us their top recommendations for the budget. Well, the first stock that we have on the list is from the advisory Monday.com. Now they play KNR Construction. That's their top bet, followed by JK Cement, ICICI Securities, DLF, and Titagar Wagons from the railway sector especially. SMC Global Securities bets on Rights Limited, KEI Industries, Gujarat Gas, JB Chemicals, and ICICI Prudential. Religare Broking bet on L&T, Britannia Industries, Coromandel International, M&M, and Ramco Cements.
All right. Thanks a lot, then, Kshitij, for sharing these important names with us. Well, most of these names are from the infrastructure, cement, or even the consumption space, and that is likely to be the limelight in the upcoming budget as well. However, what we are expecting, that most of the experts are telling us that the D Street will be okay with a minor slippage on the fiscal deficit front. However, if there is a huge spending that could actually kick in growth or put the economy back on the high growth path, that is something that the markets will react very positively probably on the budget day as well. Thanks a lot for joining us in this special edition of Editor's Take, and do stay logged on to moneycontrol.com for more news and updates. Thanks for watching.